bridging communities worldwide. We broadcast diverse international content from Europe, Asia, Africa, and now right here in the USA. Watch us via Roku on your smart TV. Submit your own content to 1530entertainmentllc@gmail.com. Download the Millennium TV app from the App Store to stream our shows anywhere, anytime. Millennium TV.
Welcome to today's America. This is Mohammad Tofader from Millennium News 24 around the globe, also United States of America. Viewers, January 24th this year, we have a tax filing started. It's going to be end of the after 2 months. So whatever we are as an American business owner, small business, corporation, real estate, all kind of tax we can file right now. And we have a guest today, expert specialist for all kind of tax, our good friend Deenice Galloway from Maryland. She is our guest today, and we're going to ask our American taxpayer benefit. We're going to ask our financial sector benefit, and without tax, how America going to be survived. So we're going to call our guest today. Deenice, welcome to Millennium News 24.
Thank you for having me.
Very good. We have platform round the clock, 24 hours news, views, talk show, and your good friend, our Cynthia, she is our good friend, our partner. She have some issue. That's why I'm going to do your show today. I am sorry what's happened yesterday. It sometimes is hassling. Could you tell us individual tax, joint filing tax, small business, real estate, all kind of tax issues already started? So how individual person can benefit, and family can benefit, and corporation can benefit?
Okay, so basically, as you know, you just said that taxes started on the 24th, so we are late. The Internal Revenue had already said that they're going to be delayed, which we know due to all the issues that we have had in the past, 2 years now. And some of the things that you need to be able to recognize for benefits in order, hopefully, to get your refund in a timely manner, as timely as they can, is just make sure that you have all of your information properly um, dated. You know, you want to make sure that your return is correct. You want to most definitely electronically file. Do not send any paper returns because they will get lost in the black hole. Um, and some of the things that for individuals that they really want to take note of is because most of your filers are going to be um, either married filing jointly or individuals with children who we had a household is the child tax credit. And as you know, we had the child tax credit for the last 6 months, and they sent out letters the end of December. The letter number is 6419, excuse me, that tells you how much you have received in the last 6 months. You want to keep that letter. You want to be able to verify that information on that letter with what you actually received. Because as we know, when we send out things like that, they will have some issues, and they've already told us that they did have some issues with the amount on the letter. So you will have to, do some verification. Make sure you verify that what the letter says is what you actually received, and so that you won't have any delay.
Very good. This is for child credit individual. And what about some people drive already they like a Uber driver, individual contractor, self-employed contractors, and small business. Same way
So
they have to file right now.
no, you still have to April the 15th to file. They have not extended the tax season, even though we have started late. As of today, there was nothing stating that they was going to extend the season. Some states have extended their season, but federal has not. What you want to make sure as a small business owner, as myself or independent contractor or Uber drivers, that you have all of your documentation, that you have all of your expenses gathered. That for your Uber driver, you want to keep your mileage. You want to keep your expenses. You want to have all that stuff gathered together in order for your tax professional to prepare your taxes as efficiently as possible and get them out as soon as possible and make sure that it's electronically filed. So those are the things for your small business. You want to, if you're going to use mileage, you want to keep your standard miles. If you're going to use depreciation, you want to keep your expenses for your Uber drivers or any contractor that use their car or motor vehicle in business. So you have two alternatives. You have the standard mileage, which the standard mileage rate went up this year. It was 58 cents last year. It went to 58.5 cents this year. So you want to keep your standard mileage if you want to use standard mileage, or you want to do depreciation. If you using depreciation, you want to make sure that you have all your expenses associated with your vehicle. So you can determine which one is going to be more advantageous. You don't have to use one or the other. You have to make a determination which one is going to be more advantageous for your situation.
Deenice, could you explain us less than 100 people worker small business? Last 2 years, so many people they do not file the tax regarding they don't have a business. So how they gonna file the tax this year?
Well, depending on the circumstance or situation of those businesses who was not in business, if they receive the PPP loans, then they do have a filing requirement. So if you receive that loan, you do have a filing requirement because you do have expenses. You may not have any income, but you had expenses. So you do want to file your taxes as a small business owner because your business, you still had to pay electricity, water, gas. You do have expenses as a small business, even if you was not earning revenue on your business at that time. So you do have a filing requirement for small businesses, and those under 100 employees, if they receive money for their employees to pay wages, they still have a filing status because that money was used for wages. And you do still have a filing status, and you will file your return as normal, reporting those wages as wages to your employees. And as a business owner, because they are wages, they are an expense to you, which you are able to write off. Even though your loan may have been forgiven, those expenses will still be able to write them off. So even if you didn't, you will still have a filing requirement.
You are 100% right, but in we are in city of New York area, but thousands of business owner, but they do not get any kind of loan or PPE or small business loan from SBA or any place, but their business was open, but they do not do any business, nothing.
Okay,
How they going to do?
so even in that situation, you still want to file a return because your business, you're not out of business. You didn't close your business down. You are still in business. So you still want to file an informational return, even if you didn't have any revenue or any expenses. You still want to be able to file. You still want to file because you want the internal revenue to know that you are still in business.
Oh, no matter what, if you have a license, if you have a business, corporation, S corporation or C corporation, whatever is it, you have to file it. You make the money or not. May I right?
You, that's correct. Regardless of whether you make the money or not, you still have a filing requirement. So you most definitely want to file the tax.
I see. Like so many business owner in city of New York, like a real estate business. Real estate business is mess last 2 years. Means some like some people they own some properties, but tenant do not pay the rent. So how they going to file it?
You for that instant, you still file your taxes. However, you cannot claim that rent as a loss. You cannot claim that rent as a loss because you take depreciation on that property. Even though you did not receive that rent, unfortunately, you are not able to claim that rent as lost income because how the internal revenue looks at it, you depreciated the property, so you are still able to receive um, tax benefits on your property. So you just don't show any rent. You still file your Schedule E as you would normally do. You just don't show any rent, but you still take in your depreciation and what other expenses that you may incurred on that property. Even though your tenant didn't pay you any rent, you still, have expenses on that property. So you want to make sure that you file that.
So they cannot put the loss business
No.
like a one building they have like 100 apartment, almost 80 apartment they do not pay the rent, government not supporting the landlord, so the whole 2 years, the whole years their business is gone, so is loss, may I right, is not loss.
It is a loss, but like I said, how the internal revenue looks at that, it is not lost income. Why they look at it that way, I have no idea, but I do know for a fact.
Like the city of New York is too expensive. rent is like a
Yeah.
one bedroom, like a 2500 or 2000, like in Manhattan. If you go to the borough, like one bedroom apartment, 1800 to 2000. So one person, if the person do not pay the rent 12 month or 18 month or 24 month, so how you can count how many thousand money is come?
No, you
So
cannot. And
but
the reason I'm so adamant on this one, because I have had 2 audits on this, and the individual claimed the rent, basically with the same thing you were saying, as a loss in income, and they denied it in both instances. The ruling on it was that because you are still able to depreciate your property, that income is not considered lost rent. Don't ask me. I don't know why they ruled it that way, or unless there's some other rulings on that. Only can speak on experience on that one. But in those 2 cases, that's the way they ruled on in that audit, that they was not able to claim that lost rent and as rental losses.
really,
Really.
the person have to pay the mortgage. Like mortgage is supposed $1,000,000
Because
mortgage a
the way
month, and the person do not get his profit or his rent, nothing, but still he have to appreciate for his property. What kind of games is that?
Well, the way they look at it, now this is how it was explained in both of those audits. The way they look at it is because you are still able to take the interest and the taxes on the mortgage that you pay on that rental. You are still depreciating that rental property, and you are still taking any other expenses on that rental property. You didn't gain any income on it, but you cannot write that lost income off, because in the case that one of the audits, we wrote it off as bad debt. It was bad debt. That's normally what you call it. They denied it. They denied it because they do not consider that a rental income loss.
Deenice, we going to do short break. Viewers,
Okay.
we are going to short break. Please stay with us. And after the break, we're going to bring our tax
Millennium
specialist,
TV, bridging communities
Deenice
worldwide.
Galloway.
We broadcast diverse international content from Europe, Asia, Africa, and now right here in the USA. Watch us via Roku on your smart TV. Submit your own content to 1530entertainmentllc@gmail.com. Download the Millennium TV app from the App Store to stream our shows anywhere, anytime. Millennium TV.
Again, today's America. Today we have a consultant tax professional, Deenice Galloway from Maryland. She is one of the expert for the tax return in Maryland, DC, Delaware, Virginia, California, Washington, and also our state of New York. She can do tax anywhere in America. She is one of the best expert financial sector and IRS authorized. So we know so many things from her. Individual tax, joint filing tax, individual contractor tax, small business tax, taxi driver tax, so many things. So we're going to call again her. Deenice, explain our statewide. Is someone doing business Washington, Seattle, Washington, but they live in California? How they going to file the tax? They have to file the tax. They have to file the tax both state, or they have to file tax one place.
They will have to file the tax in both places. So if you are in most states, if you have business in another state, you have to file the taxes in that state. And it really depends on whether the state has reciprocity or not. So in Maryland and DC and Virginia, we have reciprocity. So you may live in Maryland and work in DC. DC gets the taxes. Those are the taxes that DC gets. However, you live in Maryland. You have to pay Maryland their taxes also. So TC, if you are receiving a refund, will give you back the money that was withheld if you are an employee, and you pay your Maryland taxes. Now, if you are a business and you are selling items across state lines, then you have to pay the taxes in the state that those items are being sold in, as well as the state that you live in. So it really depends on the state, but you most definitely would normally have to pay taxes in both states.
So one state probably we have to file the tax for the business, and another state my residency, person residency. So the state he have to file his individual tax. May I right?
Yes. So
business tax or both tax have to be filed both state.
And for your business tax will be filed in the state that you are doing business. If you are individual and doing business, your individual tax will be filed in the state that you live. If you are doing business in both states, then the taxes will have to be filed in both states. And like I said, again, it depends on the state. Because the state will require your sales tax. Whatever state you're in, they have sales tax. If you're doing business, you should be charging sales tax for that state. If your products are coming from your state, then you're doing business on those products in your state. Then you have to pay the taxes in the state that you live. So yes, depending on your business, you will most definitely be paying taxes in both states.
I see. So if some corporation have some what is that called, tax audit, you guys do the tax audit too?
Now what is that again?
Like one of the small business company, so many company they have so many mistake they did on the filing the tax. So end of the year IRS do the audit. So those kind of case you guys take over or you guys do the audit?
No, we do not do audits on small businesses. However, we will amend returns if they are incorrect before they get to audit. Once they receive the letter and we know what the issue may be, we are able to amend returns, but we do not do the audit for those businesses, not in other states. And I audit for individuals that I personally handle or small businesses that I personally handle. I most definitely do that in the Maryland, DC, and Virginia area, but not in the other states. I don't do corporate taxes outside of this DMV area.
I see. So you do only Maryland, Virginia, DC, Delaware. May I right?
Yeah, Maryland, Virginia, DC, Delaware, West Virginia. I try to stay on the Eastern Seaboard.
Oh, I see.
Yeah, I stay on the Eastern Seaboard. Is mostly where I do business. And if I do have clients, I had clients in Arizona, so I will do Arizona. I try to stay out of California. They have too many rules for tax professionals. I leave that to the California tax professionals, or I will refer it to a California tax professional.
I see. Viewers, our guest phone number 240-899-5822. If anyone need any kind of help, taxation, individual, business, corporate, whatever you needed, please contact with her. She is one of the best expert we have this season. Tell us, the person is like so many people in America these days, they don't want to file taxes, but they are American citizen and they are so many elderly also. They are on welfare or retirement. So how they going to file the taxes? They have a lot of issue. Immigrant community.
Okay, if you are a citizen of the United States, even if you are not always required to file, let me back this up. Let me say it this way. If you receive some form of benefit from the state and you have dependents where you don't have to file your taxes, however you want the recovery rebate credit or the child tax credit, you need to file a tax return in order to get that, because you are entitled to it. There are a lot of individuals, even seniors, who may take care of their grandkids, or individuals on disability who have children, and they are entitled to that child tax credit. In order for you to get that child tax credit, you need to file a tax return. That's the only way you are going to be able to benefit from that financial benefit that the government gave you. So even if, just like in 2020, you had to file for the recovery rebate credit if you didn't receive it. So even if you did not receive it in 2021, you need to go back and file a return, a 2021 return, in order to get that recovery rebate credit. Or if you filed your taxes and you realize you didn't get it in 2021, you need to go back and amend your tax return. It cannot be put on the 2021 taxes. It has to be put on the 2020 tax. But you are still entitled to it, and you still able to go back and amend your taxes for it. Now, as far as those individuals who are immigrants, and they depend on whether they hold a green card or what their status is, you still, if you work in the United States and your money comes from the United States, you are required to file a tax return. So you most definitely want to file a tax return in order to be in good standing.
Another small question, the one is, so many immigrant community, Latino, African American, Asian, Indian, Arabian, So many people in America, they don't have so-called green card, but they have ID, they have social security card, and they working. They can file the tax.
Yes, they are found. They have a filing requirement. They do have a filing requirement because any income that is earned in the United States, regardless of your status, you need to file your taxes on it. You
If
have you
if someone
you
they don't
do
have a what is that called ENI or TIN or social security, how they going to file it?
if you haven't as you should have an so are you talking about individuals who don't have their I-10? If you
Exactly.
have an okay, if you okay, that's a totally different story. You still have a filing requirement, so you should um, make sure you apply for your I-10 so that you can file your tax. You have to have that I-10 in order to file your tax,
I see.
or a temporary. And I can't remember actually the name of the social. It's not called Social Security, but it is a number that they can obtain in order to file their taxes. And I can't think of it right off the top of my head. And if they earning income in the United States, they do have a filing requirement.
Everyone have to file the tax, no matter what.
Everyone,
If you are legally work in America, make money in America, survive in America, live in America, you have to file the tax. If you don't have a social security number or TIN number, you have to apply for that. Or
that
otherwise you cannot get any kind of benefit, health
yeah,
care to all away government care. Nothing, you
yeah.
cannot get it. Have to
No,
have
you can.
tax file, have to have record for IRS. Otherwise, financial sector is measurable. Viewers, so many American get last 2 years so many aid from government, stimulus, and so many things. If some people, they are residents or citizen, they do not receive those checks like stimulus checks, how they gonna claim this year?
Okay, you cannot claim it on this year, but you can go back and file last year return in order to claim those stimulus. So if you did not receive stimulus 1 and 2, you can go back and claim and file your 2020 tax return. Even if you filed it, you can go back and amend your 2020 tax return and claim to show that you did not receive the stimulus, and then they will process it and send it to you. So even if you did not receive it in 2020, you still have an opportunity to go back and amend your 2020 return if you filed a return in 2020 to claim it. If you did not file a return in 2020, you need to file your 2020 return and claim it, and you will get your stimulus.
I see.
So they still allowing you to be able to get that stimulus.
If someone filed tax 2020, not 2021, 2020, but he is out of mind that time for his ex-president Donald Trump stimulus check for 1200 or 600, but he can claim right now.
He can claim it right now by filing his 2020 tax return.
Oh,
You
he had to
cannot,
amendment.
or through an amendment. So you have one or two options. If you filed your 2020 tax return, you can go back and amend it and put it on there to show that you did not receive the recovery credit rebate, and you'll get it. If you did not file your 2020 tax return, you put it on there to show that you did not get it and you can receive it. But you cannot put it on your 2021 tax return.
Deenice, could you explain the first time, like a home buyer, what they need, what kind of document they need, and what kind of tax document they needed to show the US government or mortgage?
Okay, so if you are a homeowner, you should be receiving a mortgage statement from your mortgage, whoever holds your mortgage. And on that statement, it will show your mortgage interest and your mortgage taxes. If you are paying PIT, it will show that is deductible. That's private mortgage insurance. You are able to deduct that. All of that will be on that mortgage interest statement. That's what it's called. And you will take it to your tax preparer. And at that time, they will can use that on your taxes. However, let me just put a caveat there.
Okay.
With the increase in the standard deduction, you may need to look at both to see which one is more advantageous, whether you claim your mortgage interest and taxes and insurance, or whether you use the standard deduction. Because the only way to claim your mortgage interest, taxes, and insurance is to itemize. But the standard deduction may be more advantageous for you because it has gone up this year. So the new standard deductions are quite high on this year. So you may want your tax professional to look at both ways for you. So the new standard deduction for single went from 12,400, which is 2020, to 12,550 in 2021. For married filing jointly, it went from 24,800 to 25,100. And for head of household, it went from 18,650 to 18,800. And the married filing separately is the same as single, 12,400 to 12,550. So if you itemize and your itemized deductions are not greater than the standard deduction, even though you have mortgage, interest, taxes, and insurance to claim, it may be more advantageous for you to claim the standard deduction.
Another question is came, like unmarried children. Unmarried children, until how older the person can join, they can filing the joint with their parents, 25 or 26?
It's 24. As long as you're in school and you are considered a student, a full-time student, and your parents are still paying over 50% of your support, they are still able to claim you. But you have to be considered a full-time student and your parents are paying more than 50% of your support.
Oh, if person is not a student, they cannot be with parents, may I right?
If they're not a student, and depending on whether the parents are paying 50% of their support, they will be considered a dependent relative, and the deduction is not the same. And you will not be able to claim the same credit that you would if you had a college student. Because with a college student, you may be able to claim your American Opportunity Credit if they haven't finished postgraduate, if they haven't finished undergraduate. Because for the first 4 years, depending on whether you are paying for their undergraduate or assisting in paying for their undergraduate degree, you may be entitled to the American Opportunity Credit. So that would be one of the benefits if they were a student that you will get, as opposed to if they were not a student, they would just be considered a dependent relative, and the deduction is not the same.
Like children is over 24, but is student like they did the person doing the study masters. They already finished the graduation, but they working full time. They live with the parents, but unmarried. They can file with joint, or they have to file individual.
They will have to file individuals. So in that particular case, and let me reiterate, so if they are a student and they are working full time, their parents are not giving them over 50% of their support, because they are full-time workers. Even though they are a student, they're going to school for their master's, but they are working full-time. So the parent will not be able to claim them on the tax return. The student will file their own tax return, because they are making their own money. They're over 25, even though they are a student, but they are working full-time, and the parents are not paying more than 50% of their support.
I see. Deenice, today our time almost end. We're going to give you 1 minute to give our viewers your name, address, phone number, email address. They can contact with you. Please.
Okay. The name is Deenice Galloway. My company is Expert Tax and Consulting. You can find me on all social medias as the Vegan Tax Lady. My phone number is 240-233-6516. The business email address is experttaxandconsultingservice@gmail.com. And the address is 4322 Tavern Green Lane. That's Bowie, Maryland. And that's where I am.
Very good. Thank you, Deenice. Thank you. We're going to call you another day. Thanks God, if we are okay, everyone is okay. Okay, my dear?
Okay. Thank you. Thank you for having me. I'm glad that we was able to finally connect.
Thank you. Thank you very much.
Thank you.
Thank you.
You have a great day.
You too.
Right.
Viewers,
Bye-bye.
Viewers, our time is end for today. Please stay Millennium News 24/7 and Today's America. We are in all iOS and Android device, and also we are in all smart TVs like a Roku, LG, Samsung, Sony, and also we are on Apple TV, Roku TV, and Amazon Fire Stick. Viewers, we are in all social network Millennium News 24/7. Our YouTube channel, news channel M24. Our website millenniumnews24.com, millenniumtv24.com. Viewers, our colleague and friends working round the clock for you, news, views, talk show, documentary, etc. Please watch Millennium News 24/7. Whatever you are, please stay peace, love and happiness. Take care. Goodbye for today.